of the meeting from last week.
All right, so I'd like to call the meeting to order and turn it over to Keith.
Okay, like I just said, this is a continuation of the audit meeting from last week, where the executive committee meeting from last week, where we tabled the presentation of the audited financials. And my opinion, the audit went pretty well. Thanks to Linda and Kevin for helping me find things that were hidden in places that I didn't know where they were. And thank you so much to Patty and being very patient with us, trying to find some of the documentation that they required. And I guess I can turn it over to staff now for their presentation.
Excellent. Thank you. I'm assuming everybody's got a copy of the report with them there that they're able to take a look at and kind of work through. The way we've done it in the past is I've kind of just flipped through the pages and explained some of the differences, that kind of stuff, highlighted some things for you going through. If at any point in time anybody has any questions, please feel free to stop me and ask those questions. It makes it much easier, I think, as we're going through than waiting to the end and then trying to recoup back. So with that being said, just flipping through, if we go to page 1, the first part of the report here is our actual independent auditor's report. This is basically a summation of the basis for our opinion, responsibilities of management for the financial statements, and the auditor's responsibility, what our responsibilities were, and then a little report on the supplemental information that's included in the back of the report itself. What we have issued here is an unmodified opinion, which is the highest opinion you could get on the report. So we had no issues, with material misstatements, anything to that extent. So we were able to issue the unmodified opinion. Moving forward to page 4. On page 4, this is the comparative statements of financial position. This is basically like the balance sheet of a business. And what we're showing is 2021 versus 2020, broken up by the property, plant, and equipment, and then long-term assets. See, there's a decrease in assets of about 1.2 or 3 million this year. Primarily, that's due to the usage of the existing cash that we had in order to accomplish operations during 2021. Nothing really stood out. The long-term investments, I think we've moved some of those bonds, I think, have matured, and we moved into longer term on there. So that's why they're reflected down below as opposed to up top in short-term investments as they were last year. Moving down to the bottom, the big swing would be under the deferred revenue. Again, this is the advance monies that we have received, and we recognize it as revenue each year as we're using those funds to maintain operations. So that's the reason for the decrease in that account for the year. The long term and the short term or current portion of that. Down below is the net assets, and since this is all funded, basically all the assets, all the net assets are donor restriction because you're required to be using it with or for specific purposes. So that's why it's shown there as with donor restrictions, and we have got nothing shown without donor restrictions. Moving on to the next page, page 5. This is the 2021 statement of activities, or basically the income statement of the organization. We see up top, we're listing the program revenues, the O&M bubble compliance, different sources of revenues. Again, we have to show it. You see there net assets released from restriction because of the fact that, like we said on the prior, on the balance sheet of the statement of net assets prior to, there was all of it's restricted. We have to show that we've basically done what we needed to do. We've released the restrictions, and that's where it basically trickles down with the expenses for the different programs. From there, we do a reconciliation to take us from our beginning net assets, where we reflect the changes in net assets for the year. So the profit and loss from the year is reflected there. And then also the change in the market value of the investments. This is the unrealized portion of it. So whatever the market value of your investments have increased or decreased during the year, that's reflected down below as a non-operating expense or income. Going forward to page 6. Page 6 is basically the same report, but for 2020. It reflects the same type of information, just because it's a comparative financial statement. Those are in there from last year. Moving forward to page 7. Page 7 is the statement of functional expenses. This is basically, it's a breakdown or a more detailed reporting of what was of the sum totals that were shown on page 5. So if you see the total down below for each of those program services, they'll match what's on page 5. They're just more detailed here, showing us the breakdown of the expenses that went into each program. And again, we show it by program services and then the admin and general section as well. Page 8 is the same information for 2020, sorry, as were reported for 2021. Again, because it's a comparative, the prior year's information is also presented here as well. Moving forward to page 9. These are our statements of cash flows. It's basically a reporting of the amount of cash that has increased or decreased, and how the cash was used by specific categories here. We've got it from operating activities, we've got it from investing activities, financing. There's no financing activities related to the organization, so we show zeros there. Basically what we do is we take the beginning of cash from last year, we add the current year's activity to it, or subtract from it to get us to our ending cash equivalents, which will match what's on the statement of financial position on page 4. Down below, what we have is a reconciliation from the statement of financial activities, going back to what was reported up top in operations. So down below, it's basically a summary of the operations and how they were affected, or how they affected the cash flow this year. So you'll see the 1,360,000 on the bottom, which is net cash used by operations, matches out with the total on the top there, the net cash provided or used by operating activities. That's a summary basically of all the activity that occurred there. That's a requirement, so that's why we show it that way, some of the operation portion of it. And again, we have it for 2 years there. Page 10 is where our footnotes start. The first footnote is basically a summary of, as it says, accounting, significant accounting policies. It gives a breakdown of the organization, when it was formed, different contracts that's related to it, which I'm sure you're all very aware of. And that continues on to basically where we get to the base of the functional financial statement presentation. Again, that's basically just a summary of how I've explained the reports going back from the beginning, or the financial statements, I should say, from the beginning of the statement of net position, and then statement of activities and functional expenses. Basis of accounting, it's on the accrual basis, which is required. Cash and cash equivalents, it gives a breakdown of basically what we consider to be cash and cash equivalents, or any cash or monetary asset that's able to be used within 3 months of the year end. And then we kind of just go through and give a little explanation of different policies and procedures of the organization, basically for some other sources, property, plant, equipment, income, taxes, and going through to the next note. On page 12 is where we start the concentration of credit risk. This is basically a summary of the organization's bank balances that they have in the bank. And because we are in New York State with a municipality, we are required to have a certain amount of collateralization. That collateralization agreement has to be in place in order to basically insure anything that's in excess of $250,000 of the federal, the FDIC insurance. So that's the additional coverage that you need to have in case one of the banks does go under. We've at least got collateral, an agreement to set and insure those accounts. And this basically just reports what the bank balances were at the end of each year and the fact that they were collateralized adequately. Note 3 on page 13, I'm sorry. Note 3 is a summary of basically the fair value of the investments and the actual cost value of the investments for the 2-year comparative. So that shows what the actual fair value is as of the end of the year, what the organization's actual cost was into those assets up to that point. And then down below, we show a summary of what is recognized as basically the amounts earned from investments. So those two totals there, the 33, 227 or 277 and the 276. If you were to flip back to pages 5 and pages 6, you would see those reflected as net investment return. So that's basically the actual return that you had on the interest and on the realized gain or loss from sales. Summarized to be reported in the statement of activities. Moving on to page 4, this is just another presentation or another footnote we have to do in regards to the investments. We really don't tell anything additional here. It's just a required by GAAP for us to disclose this. Page 15. Page 15, we just down below in note 5 where we have receivables. We basically just are identifying what the receivables were as of the end of the year and the dollar amounts that those receivables were at. Basically, as it states there, it's basically the ONB bubble compliance that shows the receivables or that makes up those receivable amounts. Note 6, liquidity and availability. This was a new note that was added, I think, 2 or 3 years ago. Basically, what this is a summary of the current assets that we're showing on the books, and then taking into account those assets that have already been either restricted or used for other purposes. For instance, prepaids, they've already been prepaid and expensed, so we really don't have that liquid cash available going forward. We take out the prepaids, we take out the donor restrictions on the O&M payments, and then we also take out the contractual imposed restrictions, which is basically the restricted net assets, because we have to account for that as well as a non-spendable asset going forward. And that gets us down to the financial assets available to meet cash needs within 1 year. So it's basically the summary of the liquidity of the organization, taking it from the current assets to what we're showing as being the cash that's available to meet next year's. Note 7, this is a summary of the property, plant, and equipment, basically just showing the cost. The accumulated depreciation has been taken to date, and the net book value as of both 2021 and 2020. It also reflects down below the amount of depreciation that was taken in the current year and reflected in the statement of net of activities. And that was 2,046 for 2021 and 2,387 for 2020. Compensated absences. This is a summary of the organization's unused vacation and sick time. Basically, what we do is you take the amount of unused vacation and sick time multiplied by the individual's hourly rate, and we come up with a number here, basically saying that the individual is entitled to this amount of unused sick and vacation time as of year end. The deferred revenues on note 9. This is an explanation of the basically of the monies coming forward from the DEP. that were 18.2 million, and as they go along each year, basically that funded or is funding the activities of the organization. And again, we're showing it as deferred because we don't want to pick up 18 million worth of income in the year that it was received, because it hasn't really been earned. And basically when you earn it is when you expense or use those monies for the allocated or for the allowable expenses. That's when we're earning it, and that's why we've got the deferred revenue as a liability. And each year as we're expending against that, we're releasing that deferral, creating the revenue that's being reported in each year. And that's a summary of how those deferred revenues were basically created. Down below on the net asset reclassification, this is just basically a reclassification of the retrofit projects between the FAD and the QUIP. On this, again, summarizing also the donor assets that were net assets that were released from donor restriction, as I explained earlier on the statement of net asset or statement of activities. Again, we're using for the allowable costs. Therefore, we're releasing them from the restriction that they had and reporting them in each particular basically net asset category. Again, everything falls through the restricted anyway, but a required disclosure nonetheless. Note 11 is basically a summary of the commitments and contingencies of the organization going forward. Basically, we've got some operating leases here that look like they're set to expire. A couple of them maybe around 2023 or the end of 2022. These are basically long-term leases that the organization is currently agreed upon or in contract with. And it shows the total amounts that are due or plan to be due up in the next coming years, 2022 and 2023. The O&B receivables and payables. This is basically a footnote that just explains the activity with the O&B program, back and forth, what's due back and forth from the different counties and different municipalities, and how it's been recorded, within the financial statements. Again, it's being shown as receivables and payables, and the O&B is basically the only portion that the organization really has out there in receivables. And it's got its own separate line within the statement of net position. The filtration avoidance determination agreement. This is just a summary of the agreement itself. Down below, risks related to COVID or coronavirus. This is a required footnote we've had to put in the past couple of years, obviously because of the pandemic, and explaining the fact that potentially in the future, we're not sure what could happen as far as if anything happens with supply chains, that type of stuff, where we may be limited in what we can do and what we can obtain. And in trying to meet the organization's goals and contracts. Note 12 is about income taxes. That basically is just a summary or a caption stating the fact that the organization is a 501c3. They are not required to file income taxes or an income tax return. They are required to file a 990. Which is basically an informational return for non-for-profits. This just gives a summation of that. Related party, there was an instance, I think, where one of the supervisor or board of directors' sons is a partner in an engineering firm where the organization did do some business with. We're required to disclose that. I believe that individual abstained from voting anyway during that voting process when they were agreeing with the contract with that individual's firm. Subsequent events, this is just a summary basically saying that there's no events that have occurred after year end up to the report date, which would be required to have additional disclosure within the footnotes themselves or within the financial statements themselves. You in here note that there was a new defined contribution plan that was enacted and goes into effect in 2022. So that will be an additional footnote next year where we'll disclose basically the amount that was contributed there. Reclassifications, this is just a basically a summary or a requirement basically saying that there may be some numbers from last year that have been reclassified in different categories to make the presentation with the current year more understandable. I don't believe we had any, but we're required to state that anyway within there. Moving forward to the supplementary information. And here we've got the summary of functional expenses by county and by funding source. So this breaks it down by the individual counties, summarizing the schedule of functional expenses that we showed on the earlier within the financial statements. This is the same basic report, just broken down by county and how it's affecting program services as well as supporting services. So again, that total number there will tie back out to the statement of net activities or functional expenses, I'm sorry, going back to the earlier financial statements. The next page, 2022, is the same report, basically just for 2020. Again, because of this comparative financial statement, we are required to show that as well. The next page there on 23 is the schedule of filtration, avoidance, and determination committed. This is basically a summary of the ongoing contracts that are currently outstanding and the amounts that are remaining on those contracts. Well, I believe, Keith, I believe you summarized this information for us, right?
Correct.
To be provided to us. Again, it's supplementary in nature, and it's been something that we've carried forward. Not a required statement, but I think something the organization had wanted to see in the past. So we've included this as part of the financial statements the past few years. Moving on to page 24. 24 is another accounting report. Basically, this is our report with Yellow Book or with governmental auditing compliance. Because you are a municipality or related to doing work with municipality, we are required to have this report in there, basically stating what the requirements are, having, you know, internal control or financial reporting, that type of stuff. Attention, we would be required to note that where we felt there was a lack of control or a potential for material misstatements. And again, on this report here, same as the other one, we basically issued an unmodified opinion. We found nothing that really led us to believe there were any circumstances or issues that needed to be disclosed related to the internal controls. So again, that's the highest of reports that you can receive. And the final page there is the independent auditor report on compliance with section 295.3 of the New York State Public Authorities Law. This is an additional report that's required for New York State, basically saying that, again, we did not find any issues with the internal controls or you know, basically in connection with the New York State Public Authorities Law. And again, we found nothing. So again, it was a unmodified opinion on that as well. And that, in a nutshell, is the exciting financial statements. Does anybody have any questions for us?
Anyone?
I know it's extremely interesting information. At any point, though, if anybody does have any questions, you know, taking a second look at it, if you have any questions or anything like that, please feel free to reach out to Keith and get my contact information or Patty's contact information. I'm more than happy to discuss anything with you. And again, I'd like to thank you know, Keith and your team and Patty on my end for getting us through. Anything else for us?
No, I don't believe so. I think, Keith, correct me if I'm wrong, what we need to do now is we need to approve the report and forward it to the full board.
That's correct.
Yep. And you also have to take care of the filing that's due by tomorrow.
Correct.
Okay.
So if I could get a motion, well, actually, let's do this quick. I'll make the motion to approve the report, authorize the filing with the ABO, and move that the audit report go to the full board.
Motion.
Second.
Second.
All in favor?
Aye.
Okay.
Thank you very
Anything
much for
else?
sleeping through this. That was very helpful.
Thank you. Take care, guys.
Thank you, everyone. If you do have any questions, please reach out. Thank you.
Okay,
Thank you,
thanks.
Patty.
Bye.
Anybody want to talk about the MS4 permit? Just kidding.
But I have Achita over it already.
Exactly.
Bye.
All right, I think we're going to talk about that next week, so I will see everybody then.
Yes.
Why, we have another meeting next week, Rich?
I believe we're working on it. I don't know the
You
notice went out.
accepted it, Rich.
Huh?
I did, right? I thought 2 or 3 came in. I thought it was all for today. I don't know. So
Okay.
good. We have one for next week,
Yes, Tuesday at 9.
Tuesday at 9. Boy, I can't wait.
Oh, boy.
Talk about MS4. Yeehaw.
All right. I'll see you all then. Have a good
Bye.
day.
Have a great one.
Bye.
Okay.